Hello dear students. Accounting for share capital, we have discussed how companies issue shares in the form of par and premium. We have also seen how companies collect the money from the public in the form of installments. Well, we have also discussed the categories of share capital, that is in the form of authorized capital, issued capital and subscribed capital, and these terms you have already come across in your question. Now it is time for us to also have a keen look into what do you mean by called up capital, paid up capital and reserve capital. If you have heard to me very carefully, on the first video, I have said what do you mean by called up capital. So it is that part of the subscribed capital which has been called up on the shares, and paid up capital is that part of the called up capital which is been actually received from the shareholders. So that means the money is already being received from the shareholders in one of the installments. It can be in the form of allotment or in the form of calls. Reserve capital, we will be looking out into what exactly is reserve capital in this particular video. Now students, that we have already worked out problems under the heading issue of shares at par, issue of shares at premium, and also we have worked out problems where there is calls in arrears. Now it is time for us to understand what do you mean by forfeiture of shares. This means cancellation of the rights of the shareholders on the shares held by him or her for the non-payment of allotment money or call money or both on such shares. Now students, in the previous problems you have observed that some of the shareholders do not pay the money on first and final call. When the shareholders do not pay on any of the calls or maybe on allotment as well, in such a case the company is going to cancel the right as to be the shareholders. The reason is because they haven't paid the money. Or in other words, I can say shares are forfeited when a shareholder fails to pay the allotment money or call money or both. So the question of forfeiture will arise only when the shareholder does not pay the money, either on allotment stage or in the stage of calls. You can call it as stage or you can also call it as installments. In this particular case, we need to write the journal entry which will be for recording the forfeiture of shares issued at par. We assume it is being issued at par. Share capital account debit to forfeiture share account to share calls account. So it can be allotment account, it can also be calls account. So from your exam point of view, the forfeiture of the shares will happen only on calls. You will understand this better when we work out the problems as well. Now what is that we are going to understand from this journal entry is that share capital account which is being debited is your called up capital. So you need to get back and understand what do you mean by called up capital. To forfeiture share account is being credited because this is the paid up capital. To share calls account is going to be that unpaid capital because the shareholders have failed to make the payment on either on calls or on allotment. This takes us to the next part of the concept which is called as issue of forfeiture of shares. So what exactly is the reissue? The forfeited shares can be reissued by the company. Definitely yes. They can be reissued at par, premium or a discount. That means whatever that is being cancelled by the company, they can definitely reissue to the public what is called as reissue of shares. So when they are reissuing, they can reissue it either at a par. So you know what is the meaning of par. You also know the term premium of issue of shares. At the same time, shares can be reissued at a discount. That means it will be reissued less than its face value or nominal value. Normally, the forfeited shares are issued as fully paid at a discount. So, again from your exam point of view, all the reissue of the forfeited shares are going to be in the form of fully paid on a discount. Journal entry for the reissue of forfeited shares at a discount: bank account debit, share forfeiture account debit to share capital account. Next journal entry will be for the transfer of profit on reissue of forfeited shares. So therefore, forfeited share account debit to capital reserve. Now we need to understand what exactly is the share capital over here. Share capital is the called up capital, which is that part of your subscribed capital. That means it's already been subscribed and being paid. So therefore, now when the company is reissuing, it is going to receive the money through bank, what we call it as reissue. And share forfeited account is being debited because it is now reissued at a discount. So this concept again you will understand better while we working out the problems. Now because the shares are being forfeited and the shares are being reissued on forfeiture, the company is going to make a gain. And this gain is now shown in the form of forfeited share account debit to capital reserve. So capital reserve will reflect in the balance sheet of the company on the liability side under the heading reserves and surplus. Well students, the understanding of the balance sheet and all those things you will be learning in the later part of the chapters. So this takes us to the next concept. What do we mean by buying back of shares? When a company purchases its own shares, it is called buyback of shares. That means whatever that is being issued by the company, they are getting it back to themselves is called as buyback of shares. So as per the Companies Act, the companies can buy its own shares from either of the following. So either they can follow the first method, that is existing equity shareholders on a proportionate basis, or in an open market, odd lot shareholders, employees of the company. So this particular concept you need to understand just for a 2-mark question. This takes us now to the 12-mark question. X Company Limited issued 10,000 shares of rupees 100 each. The amount was payable as follows: rupees 10 on application, rupees 40 on allotment, rupees 50 on first and final call. The money was duly received except the first and final call on 2,000 shares. The directors forfeited these shares and reissued at rupees 80 per share as fully paid up. So what do we understand from the question? X company has issued 10,000 shares of rupees 100 each on application, allotment and first and final call. So if I add application money, allotment money and the first and final call, it is going to be equal with the nominal value or the face value. This brings us to the understanding that the shares are being issued at par. Well, on application, we are going to receive the money. On allotment, we will receive the money. On first and final call, we will receive the money, because the question says that the money was duly received on application, allotment and as well as on first and final call, except for those 2,000 shares. So how many shares do we have in the company? 10,000 shares, out of which we are going to reduce 2,000 because they haven't received any money on these shares. So for how many shares we are going to receive? It is only for 8,000 shares. The later part of the question says that the directors forfeited. So forfeited means cancellation of the rights of the shareholders for the non-payment. So here 2000 shares for which the company has not received the money, the company is going to cancel the shareholders' right. So what they are going to do in the later part? They are going to forfeit these shares. How many number of shares? 2000 shares is what they are going to forfeit. And what they are going to do? Reissue this at rupees 80 per share. But what exactly is the face value or the nominal value? It is 100 rupees. If they are reissuing at 80 rupees, this means that the share is being reissued at a discount. So what is the discount amount? 100 minus 80, 20 rupees is what is being discounted. So let's not worry about the discounted part of it. For us, the reissue of the forfeiture share is happening at a discount. The later part of the question says that these shares are fully paid up. This brings us to the understanding of what are the directors doing? They are cancelling the rights of the shareholders and they are reissuing the shares. And over here in this question, we understand that the reissue is happening at a discount. Let's work out the solution. Journal entries in the books of X Company Limited. Format of journal. First journal entry will be for the application money being received. Bank account debit to share application account. 10,000 shares on which rupees 10 on application. 1 lakh being debited and credited. The next journal entry is for the transfer of share to capital account. Share application account debit to share capital account. Again, the money that is being received on application is what is now being transferred. So on 10,000 shares, rupees 10 on application, 1 lakh is being debited and credited. This takes us to the third journal entry on share allotment account debit to share capital account, where the share allotment money is due. The calculation goes for 10,000 shares of rupees 40 on allotment, 4 lakh is being debited and credited. For the money being received on allotment, the journal entry is bank account debit to share allotment account. On 10,000 shares, 40 on allotment, 4 lakh is being debited and credited. Fifth journal entry will be on first and final call account debit to share capital account, being share first and final call money due. Number of shares is 10,000. On first and final call rupees 50. So 10,000 into 50, 5 lakh is being debited and credited. The sixth journal entry will be for the calls in arrears due to the non-payment on first and final call on 2,000 shares. So out of 10,000 shares, on 2,000 shares, we haven't received the money. Hence, 10,000 minus 2,000 is 8,000. On first and final call rupees 50, the money that is being received is rupees 4 lakh. Now we have the journal entries for the forfeiture of shares. So while explaining the question, I have said, students, the shareholders will forfeit the shares for the non-payment on those shares itself. So the non-payment of shares is 2,000. So directors are going to forfeit these shares. Hence, share capital account debit to share forfeiture account to share first and final call account, being shares forfeited on first and final call. So the cancellation of the shares is happening on first and final call due to the non-payment by the shareholders. So what is the share capital over here that is being debited? It is 2,000 shares of rupees 100 each as mentioned in the question. We get rupees 2 lakh which is being debited. To forfeiture shares account, 2000 shares of rupees 50. 2000 into 50, 1 lakh is being credited. To share first and final call account, again 2000 shares. For the non-payment of rupees 50, the amount being credited is rupees 1 lakh. Now you might be wondering on how did I get this 50 rupees? 100 minus 50 on first and final call give us 50 rupees, what we call it as up. So that means on this particular shares we are going to receive the money. Hence, the share capital account that is being debited is called up. The shares that are being forfeited is being paid up. The shares which are not being paid on first and final call is unpaid amount. The other way for you to understand might be in simple terms. Look out for the value of share that is being issued. So let's say in this question it is 100. On first and final call, look out for the money that is being mentioned. So here it is 50 rupees. Reduce this amount, you will get 50. So to break it up, called up is 100, unpaid is 50, paid up is 50 rupees. We have the reissue of shares. The shares are being reissued at 80 rupees. The journal entry is bank account debit, forfeiture share account debit to share capital account being reissue of forfeited shares. Bank account debit will be for those 2000 shares which are being reissued. So 2000 shares are being reissued at rupees 80. Hence, the reissue value that is being debited is rupees 1,60,000. Forfeited share account debit on 2000 shares, rupees 20 is being discounted. The reason is because there is a discount amount of 20 per share on reissue. So in order to adjust the discount on reissue, the amount already collected from the former shareholders on these shares, which is there in forfeited share account, is now being utilized. Hence, the discounted amount which is being debited is rupees 40,000. So to share capital account will be 2000 into 100. So 100 is what is the actual nominal value. So amount being called up which is credited is rupees 2 lakh. So now if you check the debit and the credit totals, it's going to be 2 lakh. So students, the other way to understand, for you to put it across in simple terms, look out for the information given in the question. Take the reissue value, put it in the bank account. So how much did we get? 80 rupees. What exactly is the nominal value? It is 100 rupees. So 100 minus 80, we will get 20 rupees. What is discount? 80 rupees is the reissue. The called up amount is 100. This takes us to the last journal entry, because on the reissue of forfeited shares, the company is going to get certain benefit. That is shown in the form of journal entry as forfeited share account debit to capital reserve account, being forfeited account money transferred to capital reserve account. So what exactly is this capital reserve and why is that forfeited share account is being debited? So if you look at it in students, We have got a credit balance of rupees 1 lakh on which already the company has received the money. Now this money is being adjusted against the debit balance which is being discounted. Hence, the company is going to gain out of it. Hence, forfeited share account debit will reflect in the form of 1 lakh minus 40,000. A credit balance minus a debit balance of forfeiture. So I will put a star of credit balance, a star for debit balance. We will get a capital gain of rupees 60,000 which is now transferred to capital reserve account. Well, this comes to an end of the solution. Students, please remember, the first 6 journal entries will carry 1 mark each. 2 marks is being allotted for journal entry number 7, 2 marks for journal entry number 8, and 1 mark for journal entry number 9. If shares are being issued at par, this makes up a 11 mark question. 1 mark is still missing. So now you can understand that the shares will be definitely issued at a premium. Then we will have forfeiture, reissue, and finding out the capital reserve. Well, all those things we will look it up in the later on part of the class. You can now take up this as your assignment question. Students, in this problem, for the last journal entry, capital reserve amount will be rupees 1 lakh.